Hey everybody, and welcome to the PlantStock channel. If we haven't met yet, my name is Jesse. Now, since I do a lot of interviews these days, and these interviews are normally around 30 minutes to an hour and sometimes longer than 2 hours, I felt it could be a good idea to every now and then bring you a clip from some of those interviews. The reason being that maybe some of you at times are too busy to sit down for an hour or more to watch an interview. And here you'll have like some of the more important pieces. And obviously, if you've already watched the interview, but you would want to focus on that part that might have been the most important part, well, that could be a good time to look at it again. Today, I just wanted to share with you the talk I had with Mayur Thaker now on Friday, when we talked about the upcoming earnings of Beyond Meat now on Thursday, and where he actually started talking about how low we could actually see Beyond Meat stock get to. And he was talking about $30. So I thought this is an important talk, and it'd be good for you to actually listen to what he's talking about. And it could also be good to remember that it doesn't necessarily have to be a negative thing. And before I let you see this clip, as always, I would appreciate an early thumbs up. And don't forget to subscribe to the channel if you want to keep getting more information regarding Beyond Meat and other plant-based companies out there like Oatly, Tattoo Chef, and the Very Good Food Company. And folks, please let me know down in the comments if you agree with what me and Mayur talked about. I have a question here that, do you think there's any chance that stock will pop up even with earnings beat given the time we're in?
You know, I to be honest, I don't think so. Um, I think so. I posted a tweet yesterday, and this is where I think stocks are headed in terms of their valuations. And so I think Beyond Meat is headed to, if you basically if you can come up with a reasonable long-term revenue growth target
Yeah,
for a company, let's say it's 30% or 40%. I think for Beyond Meat, it's going to be around 30 to 40% for the next couple of years.
yeah,
Um, then the rule of thumb is where the enterprise value to gross profit multiple will get to.
yeah,
So let's say if they do 40% growth for the next 3 years, right? I think that's possible, but that depends on if the market believes that or not. I think that's extremely likely. But let's say 40% is where everyone agrees on is their 40% long-term growth rate. Then I think it's going to a enterprise value to gross profit multiple of somewhere between 10 and somewhere between 10 and what is it, like 12, um, in that range.
all right. And they're right around what number right now?
10 to 13, in that range.
Yeah,
They're at, so let's say, if we look at the last 4 quarters of gross profit, that's about $130 million using my estimate for Q4. So, there could be some further downside. So like if I were to use the upper end of my range, which is a multiple of 13, 0.2. So 13.2 times 130 million, um, that gives us a market cap target of roughly 1.7 billion.
right.
So 1.7 billion market cap, and given my estimate for the diluted shares outstanding, which is roughly $64 million,
Yeah,
that gives us a price per share of somewhere in the $30 range. So that's the bear case, for Beyond Meat, roughly $30 a share.
hmm,
And it could happen. I mean, a lot of these companies are getting really wrecked right now. Like companies that, even don't even have gross margins like Beyond Meat, like, companies that have much higher gross margins, software companies. We saw what happened to Roblox this quarter, just this week. Roblox reported, and, it was, a lot of exciting things that they're working on. The market didn't care, right?
no,
They're taking everything to the woodshed.
yeah,
So I think the bear case for Beyond Meat is, in that, $30 range. And it's the same with Oatly too. Um,
Yeah, under
the way
five.
that stocks are being priced right now, I think it should get to, yeah, if this is the trend, if I'm right about this range of enterprise value to gross profit relative to revenue growth expectations, Beyond Meat could see $30 a share. Oatly could see $5 a share.
Yeah.
So that's where, these stocks are headed. Um, and it is what it is.
Mm. But
So I think once it gets there, though, the faster it gets there, the better, right? Because let's just get it out of the way, get all of the excess speculation, get all of the sky high expectations out, build a base, and then allow people to now formulate a new dollar cost average at that new level.
right.
After which the companies will trade based on their fundamental revenue growth.
Yeah.
Right now, the main risk is valuation risk. Once that valuation risk is removed, then stocks will move up or down from that base based on their actual fundamental performance, which is how stocks should perform anyway in the long run.
Yeah.
We shouldn't be, worried about valuation risk much. We should be focused on where our revenues going, where is profitability going, um, and how much is the upside for the company in terms of revenue and profit growth.
Yeah.
That should be where stocks trade in the long run anyway. So the faster we get to this multiple, the faster we can get back to a discussion on fundamentals.
Yeah, I think because I think we talked about in one of our videos that within I think 4 to 5 years you see them at around 160 to $180, and I'm guessing that idea hasn't changed just because it would go down to $30. It's just be a good, better pricing to go into.
Yeah, yeah, exactly. It'd be a much, much better price. It takes us back to where valuations are normal.
So
So I'm looking forward to it. I honestly don't think that, anyone should really, I don't think we should panic about any of this stuff. I think this is just a very healthy move for all stocks. It's
yeah,
not just obviously not specific to Beyond Meat or Oatly. Everyone is being put under the microscope. Redfin right now is down 25%. It's one of the biggest, discount brokers out there in terms of in real estate. There's so many other stocks down 30% in a matter of 1 week.
yeah,
Um, so, and Kathy Wood, right? Her entire flagship fund is down, right?
yeah,
Everything in her portfolio is down too. So, no amount of research is protecting you against companies that were once very highly valued,
yeah.
right?
So, but we
So
should.
it's just a function of us living through a crazy time.
Yeah, definitely, definitely. And we should remember when it comes to Kathy Wood, what I like about her and hers, she's not wavering. She still believes that when it comes to innovation stocks, disruptive stocks, which Beyond Meat definitely is, it's still going to be the future, and you shouldn't bet against it. And when it comes to her own funds and her own stocks, she's basically bets half of her own fortune on it. So she stands to lose something there too.
Yeah,
Mm.
absolutely.
So
So yeah, I'm not selling any of my shares. I'm still long Beyond Meat and Oatly. Obviously, it's not investment advice. Don't take it as investment advice. But I'm personally long all of my shares of both companies and all of my other companies too.
yeah,
And I'm just simply going to wait for some evidence of a bottom forming.
yeah,
And once that is put in, then it's time to start dollar cost averaging.